Welcome to another session on the chart of accounts. In this session, we will learn how to enter the opening balances for equity and liabilities in Xero software. First, let's discuss the share capital account, which reflects the amount of money the shareholders have invested in the business. In our list of accounts, you will notice an option called owner's capital. Typically, this account is used to represent the owner's investment in a private firm. However, in the context of the limited liability company, we use the term share capital instead. Rather than using the existing owner's capital account, we will create a new account specifically for this purpose named share capital. To create a new account, begin by selecting the account type equity to appropriately categorize it. And assign a unique code to this new account, such as 3100, to ensure it is easily identifiable within our financial records. Name the account share capital and then save the information. Once the account is set up, we will proceed to add the credit balance of $15,000, which is the initial investment of the shareholders. Next, let's focus on the retained earnings account. You can see we already have an existing account designated for retained earnings, so there is no need to create a new one. So we will simply select this account from our list. Next, we will add the opening balance of $6,735 to the credit side. Now, let's discuss setting up the term loan account. Since we do not yet have a specific account for long-term loans, we will need to create one. For that, start by clicking on Add New Account. For the account type, select non-current liabilities, as this loan will be repaid over an extended period of time. Next, assign a unique code to this account, such as 3200. Name the account Chase 5-year term loan to clearly indicate its period and source. In the description field, add some context to provide clarity, such as loan acquired for the purchase of new assets, enhancing productivity. This description helps anyone reviewing the accounts understand the purpose of the loan. After entering all the necessary information, save the data. Once saved, the Chase 5-year term loan account will be created in our system. Lastly, let's record the credit balance of the loan amount, which is $20,000. Next, we will create an income tax payable account. To start, click on Add New Account. This time, select current liabilities as the account type, since taxes are short-term obligations that need to be settled within a year. As always, we need to assign a unique code to this account. So let's add 2300 as the account code. Let's name the account income tax payable. In the description field, provide some context by adding income tax payable related to the financial year 2023. After entering all the necessary details, save the information. This action will create the income tax payable account in our system, enabling us to accurately track our tax liabilities. Finally, input the credit balance of $1,445, representing the current amount of income tax that needs to be paid. Now, let's address the sales tax account. If we review the list of existing accounts, we will find sales tax listed under the liability section. We can select this account to proceed. Finally, input the opening credit balance of $450, which represents the outstanding sales tax liability that the business needs to settle. Similarly, let's move forward to address the salary payable account. For this purpose, we already have a specific account called payroll wages payable. While it is possible to show the balance for each employee separately as presented in the opening balance report, we currently do not find it necessary to split the salary payable balance at this stage. To proceed, we need to select the payroll wages payable account. This account is specifically designed to track outstanding wages owed to employees. And next, we will add the credit balance of $3,610 to record the opening balance of salary payable. Continuing, let's focus on the withholding tax payable account to accurately record the opening balance for employee tax withholdings. In Xero, we will use the existing account titled Federal Payroll Liabilities, which is designated for this purpose. First, select the Federal Payroll Liabilities account from the list. Next, input a credit balance of $1,055, representing the total taxes withheld from employees' salaries that must be remitted to the tax authorities. Next, we will address the remaining two payroll liabilities that are Medicare and SST payable and unemployment insurance payable. While we have the option to utilize the existing other payroll liabilities account for these balances, creating individual accounts for each will ensure greater clarity and organization in our financial records. So we will proceed by creating individual accounts for each. First, we will set up the Medicare and SST payable account. Begin by selecting the account type current liabilities to appropriately categorize this short-term obligation. Assign a unique code to the account, let's say 2110, and name the account Medicare and SST payable. After entering the required details, we will credit this account with $415. This amount represents the combined Medicare and Social Security taxes that need to be remitted. Next, we will create the unemployment insurance payable account under the same account type, current liabilities. Let's assign a unique code, let's say 2120, and name the account unemployment insurance payable. After adding the account details, let's save them. Next, we will credit the account with a balance of $75. This balance reflects the amount owed for unemployment insurance, which is a mandatory contribution. Finally, we need to address the Bank of America credit card account. Similar to the Chase Bank checking account, this requires linking the credit card to the software, which involves several specific steps. Due to the complexity and different procedures required for this task, we will skip this process for now and handle it later in this chapter. So far, we have successfully entered all the opening balance items except for the bank balance, inventory, fixed assets, and credit card balance, which we will address later. Once all the necessary balances are entered, we can proceed to save the information. When we click on Save, Zero prompts us to add any invoices or credit notes that were dated before the opening balance date, which are not yet fully paid and are reflected in the account receivable balance. We will go through this process in our next session. That's it for today. In our next session, we'll begin by adding pre-dated invoices and credit notes and cover the necessary steps required. Review today's material and come prepared to continue our process.